Hello, Internet. Welcome to Making Money. My name's Eric, and this is your Daily Dollar, our financial segment where I give you one lesson every day to help you with your finances. This is a big episode. This is an episode I've been kind of waiting to do for a while now. We are going to be talking about investing. Truly investing. We've talked about investing in ourselves, which obviously is very important. I've mentioned that we're going to be getting to investing eventually. Investing is a huge topic, and it's very important. But it's also very important to get your foundation built first, your understanding of your basic finances before you get into investing. Investing does require you to have some money put away. You need to have savings like we talked about before. Emergency fund is very important. You need to have that income coming in to pay for your expenses, to pay off any debt that you currently have. Those things are more important than investing. But when you start to get some of that disposable income, something that you can look at doing is getting into investing. And this is going to be big for your future. And honestly, the sooner you can get yourself in a stable situation to start investing, the better. Because this is where we start to compound our money over time. When we talk about investing, for now, I'm going to be talking about the stock market. So we are talking about stocks only. We will be getting into a variety of other topics, some related to the stock market, some related to outside the stock market. Investing is a very large topic. It doesn't necessarily mean the stock market. It's just that we tend to talk about the stock market and investing kind of interchangeably. So for now, just to make the definition nice and clear, when I talk about investing, I will be talking about investing in the stock market. Okay, so today's lesson with investing, very high level. We're going to hit 6 topics, which is a lot for a single lesson. But each one of these topics is really something that we can do lesson or multiple lessons on, and we will be doing in the future. Some of these we've already done before, like topic number 1. When you get into investing, one of the first things you want to do is identify your objective. What is it that you want to do with investing? Do you want to look at growing your money? Do you want to look at having sustained income? This is difficult, I know, especially if you're just getting into investing, because you might not exactly know what can I do with investing. What are the possibilities? But as we talked about with goal setting in the very first Daily Dollar episode, this is very important going forward. This definitely can be something that's iterative, right? You can have an idea of, okay, I think I want to, work on, a growth portfolio. I want to grow money kind of quickly at the beginning here. You may just want to be, your objective may just be to learn about the stock market, right? What does, different parts of the market mean? What can I get from this area? What grows quicker? In what circumstances? When one thing goes up and this thing goes down, why? So learning might just be your objective at the beginning, but having some sort of objective to start with is important. The next thing is understanding your level of risk. And again, if you don't really know investing, this might be difficult. But really, it's how much you're willing to stake and how much you're willing to lose. You shouldn't put any money into the stock market that you absolutely can't live without. Yes, it could be devastating to lose it. And obviously, the goal is to grow it, not lose it. But anytime we talk about investments, there is some level of risk. Yes, the risk is very low in some areas. It can be very high in others. And depending on how much risk you put in is going to, for the most part, can kind of balance out with what your expected, return on investment is going to be. That's not always true. We'll get into that. But understanding what you're willing to stake, and if you're willing to, if you took a 10% cut, would that kill you? Obviously you don't want to be put in that situation. So understanding what your risk is, your tolerance is very important. We talked about emotions before. that your emotions, your gut feelings can drive you in the wrong direction. Investing is a super important area where you got to start getting control of your emotions. If you're someone who is very at the whim of your emotions, investing can be very difficult. In fact, if you're extremely motivated or molded by your emotions, you should think about setting up an investment strategy that's a lot more hands-off. This can be good even if you're not, strongly affected by your emotions, just because it's a little easier over time to manage. But especially if you are affected by your emotions, being able to be hands-off, not being able to go in every day and go, oh, it's doing this, the market's doing this, should I do this, should I sell, should I buy, whatever the situation is, being a little hands-off could be better. But for now, trying to get an understanding of what your emotional level is and how much control you have over your emotions is going to be big. Next is to study the market. The market's huge. We talk about a bunch of different companies. There's a bunch of different sectors, and it's always moving. We are in a weird spot right now where over the course of the pandemic, we had highs in tech, we had highs in medicine. There's a ton of areas that we would, finances went through the roof. We're very high in a lot of areas right now. Even after the dip, gas and oil went back up, even, flight, Boeing, regardless, we've seen a lot of movement in the stock market, and we're at a weird point right now where things are high and they're starting to self-correct a little bit, balance out. It's a little uncertain what's coming up. And we'll talk what to do in an uncertain market. But for now, study the market. Maybe not throw in money right away. Obviously, you do want to get into investing right away, but understanding the market, taking time to learn it, that's part of that getting started. So take some time, look at the market, watch what it does over the next, weeks or months here. If you've got some money to throw in, excellent. This might be a good time to start testing the waters in some area, but the big thing here is you want to really take a look at the market and start to understand it a little bit. And I think that's very important. We talked about that there's a lot of different sectors. Sectors will change independently of each other. Some sectors are linked where they both tend to go up and down at the same time. Other sectors tend to go inverse of each other. When one goes up, the other goes down. The best thing that you can do in a balanced portfolio is to diversify. And basically what this means is you want to have a ownership of a little bit of everything. Just in case if the market in general, certain things were to dip and other things were to go up, you're not affected too much, right? Those kind of even out. The market as a whole tends to rise, but different sectors might rise in different ways. Or fall in different ways. So owning a little bit of everything helps even that out. We'll get into obviously a lot of this more as we go forward. But the last thing I want to mention is leverage, especially when you're starting to open up investing accounts with variety of brokers, and we'll get into again brokers as well. But you'll find that you have the option in a lot of cases to do what's called margin investing. And basically what this is borrowing money and using that money to buy stocks. This is very risky. You're basically playing with, money that isn't yours. You can make money off them, that's great. But if you lose money, you now owe even more. You may owe money that you don't have. And chances are, if things go south, you probably will owe money that you don't have. And it can be a lot of money. So watch out with leverage. It can be a very positive thing when you understand it and you can work with it. But especially now, best to just avoid it in its entirety until you understand a little bit more and start getting comfortable. Even at that point, it isn't something that you have to use. So that's what we're going over today. That's it. I know I threw a lot at you very quick, but those 6 items are kind of a good a good base to where we're going to be talking about, especially over the next month here. So I hope you guys are excited to get into investing. I really am excited to be talking about this. So stay tuned for more episodes. I'm interested. Do you guys invest now? If you had to set where you're at in your investing, would you say that you're brand new, sort of new, moderate, an expert? Love to hear in the comments below. As always, if you're enjoying this series, I appreciate subscriptions. It also helps you stay in touch. And if you want to hit me up on Twitter, you can find the link in the description. Yeah. I guess I will see you guys in the next video. Have a good one, guys. See ya.